Bitcoin is down in value by 45% since the crypto asset's all-time high 3 months ago, and the downward movement has ignited significant speculation about another bear market. The price of Bitcoin is lower than it was 3 months ago when the crypto asset touched an all-time high of $64,895 per unit, roughly 90 days ago. Since then, Bitcoin has been consolidating above the $30,000 region, and many are uncertain of what prices will come next. Since Bitcoin was created in 2009, thousands of cryptocurrencies have been created. Crypto data provider CoinMarketCap currently counts just over 10,000 different crypto assets. Some, such as Ethereum, the second largest cryptocurrency after Bitcoin with a market capitalization of $240 billion compared to Bitcoin's $630 billion, have established themselves as cryptocurrency mainstays, while others, including EOS and more recently Internet Computer, have made splashy debuts only to fade away over time. Internet Computer's ICP token is down over 90% from its all-time high price set shortly after its launch in May, while EOS, which made headlines when it raised $4.1 billion ahead of its launch in 2018, is trading 80% lower. In this video, I am going to try to answer the question of whether or not Bitcoin is still a good investment vehicle, or is it something that no longer reaps the desirable profits against the inevitable risk. But before we go on, can you hit the like and subscribe button? Thank you. Bitcoin is a digital currency created in January 2009. It follows the ideas set out in a white paper by the mysterious and pseudonymous Satoshi Nakamoto. The identity of the person or persons who created the technology is still a mystery. Bitcoin offers the promise of lower transaction fees than traditional online payment mechanisms, and unlike government-issued currencies, it is operated by a decentralized authority. Bitcoin is a type of cryptocurrency. There is no physical Bitcoin. Only balances are kept on a public ledger that everyone has transparent access to. A massive amount of computing power verifies all Bitcoin transactions. Bitcoin is not issued or backed by any banks or governments, nor is an individual Bitcoin valuable as commodity. Despite it not being legal tender in most parts of the world, Bitcoin is very popular and has triggered the launch of hundreds of cryptocurrencies, collectively referred to as altcoins. Bitcoin is commonly abbreviated as BTC. Pros of investing in Bitcoin. Number 1, Bitcoin is here to stay. Bitcoin is the first cryptocurrency ever introduced to the world. When it first launched back in 2009, it so rapidly disrupted the global financial systems that it made all the headlines. So much so that people started referring to it as the future of money. This was at a time when there was a significant distrust in the hearts of people for traditional banks and other financial bodies, as they didn't feel comfortable having control over their own hard-earned money. Bitcoin changed that. It offered people something they wanted: control over their own money. In a matter of a few years, Bitcoin went from being an early adopter's experiment to being a global hit, and the prices skyrocketed, making some people insanely rich. Now, even though that price rise is not as poignant these days, what has stayed is people's sentimentality towards it, which means that there will always be demand for Bitcoin, making it a good investment tool. Number 2, Bitcoin is decentralized, transparent, and immutable. Perhaps the most noticeable and applaudable quality of Bitcoin is its decentralized nature, i.e., it is not controlled or regulated by any central government body or financial institution. Instead, the control is distributed to the actual owners and is, therefore, more decentralized. Being an application built on top of blockchain technology, Bitcoin also has the perk of transparency. Any transactions made in Bitcoin are recorded on the blockchain and are fully transparent and trackable, which that means you can, quite literally, track down every Bitcoin transaction in the world, allowing for high degrees of accountability. Not only that, but the transactions are also immutable, i.e. they cannot be altered by an external party because the transactions are stored in blocks and locked in mathematical code. Alteration in one block would require changing all the linked subsequent blocks. Number 3, Bitcoin is pseudonymous. While traditional forms of banking transactions require you to have your identity verified, Bitcoin, on the other hand, offers the benefit of privacy. While transacting via Bitcoin, you don't need to get your identity verified or registered anywhere. All you need is a public and a private key. A public key is like your bank account number, and your private key is your password. To transact, you send your public key to whoever you wish to make a transaction with. The private key stays with you and only you, kept safe and out of reach of anyone else. Cons of investing in Bitcoin. Number Number 1, Bitcoin has a high volatility. Unlike fiat money, Bitcoin is an asset of a limited availability. As a consequence of being decentralized and having no regulatory body governing its flow, its value is influenced purely by market forces, i.e. demand and supply. Due to that, Bitcoin is a volatile asset and is liable to rise or fall rapidly, and it is difficult to predict future prices. An investment made towards Bitcoin needs to be incredibly well researched, so as not to suffer huge losses. Number 2, Bitcoin is not entirely safe. Even though blockchain transactions are pretty much unhackable, the fact of the matter is that Bitcoin isn't 100% safe. For instance, if you ever lose your private keys, your account cannot be recovered. Period. This is because, as we discussed, there is no regulatory body. This means that one of Bitcoin's biggest strengths is also one of its most significant weaknesses. The lack of regulation and the quality of pseudonymity can allow for crimes like money laundering and the purchase of illegal substances to occur. Number 3, Bitcoin has limited use. As revolutionary as Bitcoin and other cryptocurrencies are, we are still far from using it as an everyday transaction medium. The world is undoubtedly becoming more crypto tolerant because you can now buy airline tickets, cars, and even Rolex watches using Bitcoin. However, you'd still have a hard time finding any grocery store near you that accepts Bitcoin in exchange for veggies and fruits. The point here is not that Bitcoin is unusable, but that Bitcoin cannot be relied on for routine everyday transactions. Don't invest so much in Bitcoin, even if you are 100% sure that the prices are about to shoot up, that you have no actual disposable income left. Following up on volatility, Bitcoin and cryptocurrency prices have been struggling recently, with the crypto market's combined value slipped under $1.5 trillion, down from $2.5 trillion in May. The Bitcoin price, after getting an unexpected boost from Tesla billionaire Elon Musk last month, has resumed its decline over the previous few weeks, falling back toward $30,000 levels per Bitcoin. Now, as Bitcoin charts show, the price's 50-day moving average has fallen below the 200-day moving average, a pattern known as the death cross. Previous death crosses resulted in further price declines of 70% in 2018 and 47% in 2019. The death cross in 2020 occurred shortly after the coronavirus pandemic induced market crash in March 2020. Bitcoin's death cross, despite its ominous name, appears to be a lagging price indicator. The last time the trading pattern occurred in March 2020, it heralded a huge Bitcoin bull run that helped even smaller cryptocurrencies surge to all-time highs. There could be a host of contributors to the decline. For one, China has recently been cracking down on crypto mining, and it banned financial institutions from offering crypto services earlier this year. Bitcoin tends to be hypersensitive to headlines, particularly those involving Elon Musk or Tesla. Bitcoin and China were pretty much a match made in heaven for a long while. A totalitarian country, the censorship-resistant coin was the only sign of hope for the country, until a recent decree by the CCP shut that down. With the majority of Bitcoin mining coming from the so-called new superpower, it is not much of a surprise that China's renewed crackdown on the cryptocurrency industry wiped off around $300 billion in value from the total market capitalization of crypto assets since last month, when a significant Bitcoin mining hub ordered miners to shut down operations. The sudden crackdown has primarily been driven by the inherently speculative nature of cryptocurrencies, and the Chinese Communist Party's extreme aversion to risk, or anything outside its control. But compounding matters is the enormous environmental toll of crypto mining, undermining Chinese President Xi Jinping's ambitious promise to make China carbon neutral by 2060. An acronym stands for fear, uncertainty, and doubt. It is a strategy to influence the perception of specific cryptocurrencies or the cryptocurrency market by spreading harmful, misleading, or false information. FUD is sometimes a word used by the crypto community to describe the skepticism of cryptocurrency temporarily bearish for the inevitable crypto market. Many crypto enthusiasts will use the term to describe anything that opposes Bitcoin or crypto. They will sometimes dismiss those who are cynical of cryptocurrency as shills spreading FUD. Last year has seen a massive surge in demand for Bitcoin, mainly coming from large businesses that understand the consequences of US monetary policy. Some significant Bitcoin holding companies include MicroStrategy, a prominent business analytics platform, has adopted Bitcoin as its primary reserve asset. Not only that, MicroStrategy is holding over $2.4 billion in Bitcoin. Their CEO Michael Saylor said that he was buying $1,000 in Bitcoin every second. Saylor's holdings are currently worth over $1.125 billion. And MicroStrategy is looking to get other companies invested in Bitcoin. In February 2021, they will be hosting Bitcoin for Corporations, an online course to get companies up to speed with the crypto. Tesla and Elon Musk. Chief Pumping Officer Elon Musk has been publicly supporting Bitcoin for some time now. On January 8th, he announced that Tesla is investing $1.5 billion into Bitcoin. This represents 15% of their total cash holdings. Immediately after the news, Bitcoin has grown to over $48,000. Grayscale Digital Large Cap Fund. The fund currently holds Bitcoin, Ethereum, Bitcoin Cash, and Litecoin, with the largest share being held in Bitcoin of 81.6% as of January 2021. Their 7,100 Bitcoin is currently worth a little over $200 million. Above mentioned companies are only a few of the prominent players that have joined Bitcoin recently. Although no data is proving the involvement of other companies, it is safe to say that not all the Bitcoin holders are making public announcements about their purchases yet. The further the adoption goes, the more companies will become more eager to join the club of Bitcoin holders. Blockchain technology is already used in traditional banking systems, including international payments. Some of the US banks are now taking upon themselves to create their blockchain-based systems, including digital currencies to enable cryptocurrency payments between their corporate customers. Financial and payments technology companies like PayPal, Visa, and MasterCard are now adopting the power of blockchain, and the best is yet to come. To summarize so far, we have made 6 compelling points in this video, which are the following: the history of Bitcoin, pros and cons of investing in Bitcoin, death cross, impact of China on Bitcoin, and the future of Bitcoin. So, is Bitcoin dead? The answer is no. The world's biggest cryptocurrency is here to stay. Crypto is nothing if not resilient. All of the news of Bitcoin dying is done to get in at a lower price and to be able to adopt the technology at the lowest possible cost. Anytime Bitcoin is dying, crypto believers are trying to buy more of it. Slowly but surely, Bitcoin is becoming a way to store value rather than just a speculative asset. Regardless of its price, it is here to stay. As more companies and banks start to accept cryptocurrencies, the Bitcoin price will only go up. Is Bitcoin considered a good investment in the long term? Given all the points mentioned above, my answer would be a calculated and optimistic yes. This is mainly because, as I said, Bitcoin is a scarce asset. Its supply is not unlimited, making it a valuable commodity. As time passes and all the 21 million Bitcoins are mined, the prices are bound to become more stable, making it a much safer investment option. However, despite all of this, you should decide for yourself if Bitcoin is a good investment for you or not. Consider all the factors that you possibly can and make sure to never invest more than what you can afford to lose. This way, you'll be going in safer and more prepared, and more likely to profit from your Bitcoin investments. That's it, guys. We have come to the end of this video, and I hope I have been able to help you gain some valuable insight into your investment journey to make better and more intelligent investment decisions. If you did, feel free to like this video and subscribe to the channel. Thank you!